Good day, ladies and gentlemen. In today's video, I want to talk about some of the major factors that I'm looking at. Good day, ladies and gentlemen. In today's video, I want to talk about some of the major factors that I'm looking at. Good day, ladies and gentlemen. In today's video, I want to talk about some of the major factors that I'm looking at. Welcome, folks,
to the live stream.
In today's video, I want to talk about
why
some of the major factors.
Is my voice playing? Does anyone else hear another me, or is it just me? It could just be me, just the voices in my head. Folks, thank you for joining me on this late evening for those in North America. Apologies for the later live streams. Me and Messin are going to try and get on more of a consistent schedule here in the near future for live streaming. I do see someone saying pinkies up, 100% pinkies up. If you're going to stay hydrated, be hydrated, classy. And so whenever you drink water, always put your pinkies up, because we stay hydrated, we stay classy, and we stay knowledgeable. So folks, thank you all so much for joining me on this live stream. We're going to go through quite a lot, because the market, I mean, it's always going to make it break a territory. But specifically right now, folks, we are seeing some bearishness. We're seeing some bearish price action paired with fantastic fundamental news. This is a extremely confusing market, folks. We had some inflation numbers come out recently. Inflation is skyrocketing. We have some charts visualizing the money supply increasing, and at the same time, while inflation is increasing, the dollar is pumping. It doesn't make a whole lot of sense, but that's getting into the live stream. We are just getting ready. Bear with me, folks, due to our setup. On my end here, there is a couple things I do have to do before I start. A couple buttons I gotta click, a couple copying, pasting, that sort of thing. So folks, in the meanwhile, if you're bored, if you want to entertain yourself, please smash that like button, because literally the more likes we get, the more views we get. So if you like the live streams, if you want more people viewing this kind of content, definitely smash that like button. Okay, folks, so give me 2 minutes here, and we'll definitely get going. Hope you guys don't mind the music. Now, unfortunately, I wish I could play like actual good music, because I was jamming out to some tunes earlier, but unfortunately, we cannot play that on YouTube. So bear with me, folks. We'll get started shortly here. I heard it all good now. What up, folks? You heard the music? Was I not on mute? I guess you heard the music. I'm scared. Give me some hopium. Okay, so folks, this is gonna be a let's all be confused together live stream, because frankly, the fundamentals, like in the thumbnail and in the title, are absolutely fantastic. We have some recent numbers coming out that I want to share with you folks in terms of inflation, money printing, how that correlates with Bitcoin, some kind of big news stories to discuss some fundamental reasons to think that Bitcoin's looking bullish. I mean, miners are beginning to accumulate. We're going to delve into all those numbers. So the fundamentals are fantastic, but the price action is the exact opposite. The price action is absolute shit. So folks, I keep wanting to let me just finish up here on my end so that way I can actually just focus here on the actual content and the actual live stream. So I will begin very shortly here. How is everyone doing? I know Buddy's saying he wants some hopium. Believe me, I want some hopium as well. Unfortunately, I do want to try my best to let our people know who follow the live stream that there are some concerning things, and if a couple scenarios play out, I'm gonna start to move more into stable coins. So folks, you know, I'm bullish on this market. I believe in this market long term. I'm gonna share with you guys some super bullish fundamentals, but price action's not too good. So folks, by the way, let me know if this lighting is okay. We kind of changed our lighting situation. Am I too like pale? Am I blue looking? Am I white? Let me know if this lighting makes any kind of sense. So folks, just give me a second here. Very shortly we shall begin. I promise. I just got one more link and then we'll go ahead here. In the meanwhile, someone says smash that like button. 100% folks, smash that like button. While you're waiting, do me that favor, entertain yourself with smashing that like button, because literally the more likes we get, more views we get. It's all about YouTube algorithm. You know, if YouTube, you know, the algorithm, you know, kind of tracks the ratio between viewers and likes, and if we get like a spike in likes, then they'll recommend the live stream more, and we'll get more views. So, folks, if you like me, or like these market updates, smash that like button. Easiest way to support us. So, okay, all right, I'm wrapping up here. Wrapping up very soon. Okay, I'm free. I'm yours. All right, here. I don't want to panic. Because if you're going to panic with our bybit link down in the description below. So what are you guys saying right here? I know you're going to give it to us straight. Yes, I'm definitely going to. And again, folks, this is a super confusing market. I am personally highly conflicted. I'm very conflicted. I'm in this market. Haven't really sold out. I moved into stable coins. I bought back in. The fundamentals look great. The off-chain metrics look great. The fundamentals look fantastic. The price action looks like complete shit. So it's hard to make sense of what's going on. Bitcoin and Ethereum are both falling below some critical support levels. We're testing some support levels. So we're just going to go through a couple things here and get going here. So I see Dolphin saying, what up, brother? What's up, everyone? You guys are the best. Thank you for being here. Meta Hero is fire, my man. Yeah. I don't know about altcoins, man, right now. Altcoins are really sketchy right now. Well, you know, depending on your viewpoint. But folks, let's begin describing a few scenarios here. So Bitcoin is looking short-term bearish. So, but you know, that's nothing, you know, out of the usual. Why should we be worried? Well, one of the reasons why I'm a little bit more worried than usual is the fact that Bitcoin is testing and seemingly for now. Oh, by the way, let me take that off here. There we go. So, by the way, it seems like the little price bar at the bottom isn't moving. I'll see if I can get that sorted out on my end here. But just folks, before I really delve into it, let me just preface by kind of summarizing briefly some of the stuff I want to go over in this live stream. Isn't it funny? Like whenever I'm trying to do two things at once, I do both things poorly. So just give me a second here, and we should be sorted out. Okay, that should be better. There we go. All right, folks. So we have some inflation numbers coming out. We have some off-chain metrics coming out in terms of miner accumulation. I want to update you guys on the hash rate, that current situation, some kind of adoption news. So there is much to discuss. I want to update you folks on alts, Ethereum, some critical levels that hopefully we can hold. I want to give you guys some levels that if we don't hold, the bears start to look like they're winning. And so, folks, right now we're within this sideways moving territory. Right now, this boring territory is extremely critical to pay attention to, because while it seems like we're just kind of going sideways within a range and not really doing much, this going sideways within a range and not doing much is what will determine what the next 6 months of price action for Bitcoin and the rest of the market looks like. So this is absolutely critical. The more boring we get, the more you should pay attention, because the more boring we get, the closer we are to a big move. Because big moves don't typically happen until people are bored and exhausted and don't want to touch the market, and only after you stop paying attention and everyone gets exhausted is when a big move happens. So this is the time to pay the most attention, and it does seem like we're breaking support like usual and testing some critical levels. So let's begin by kind of describing some of these levels that are very critical. The 50-week EMA and the 55-week EMA, two high time frame moving averages that we've held as support all throughout the crash. Let me reiterate this, folks. All throughout the crash, we've held these moving averages as support. So on the weekly time frame, if we lose these moving averages on the weekly time frame as support, that is a new factor that we need to plug into our equation when trying to consider what could happen to this market. It would be if we get a weekly close in 4 days and 22 hours before these moving averages, but below these moving averages, sorry. That would be bearish confirmation, and it would be one factor that tips things over in favor of the bears that could drive price action further downwards. And it's not just percentage drops that we need to be concerned with, it's also the length of time. Because folks, if we leave this 30,000 range, if indeed the bears win and we go lower, it's not just that we're going to go lower, it's that we're going to go lower potentially, that we could go lower for months if not years. That may not end up being the case, but if we lose this 30,000 range as support, then the likelihood of us going down percentage a lot, but also for an extended period of time, vastly increases. There's 100% a scenario where we could have a flash crash down to maybe 24, 26, and then immediately get spot back up. That's totally possible. But folks, I just want to make it very clear that the likelihood of an extended correction in consolidation phase, both by percentage down and in time going down and sideways, vastly increases. A 1-2 year long bear market or consolidation market, the likelihood of that vastly increases if and when we lose 30,000 as support. Basically, if we get daily candles making a lower low, closing on a lower low, basically if we have a daily candle close below 30,000, 29,000, then the bears look like they won. And if they win, they could be winning for the next several months or years. So it's absolutely critical that we don't lose further critical support levels. And the 55 EMA and 50 EMA on the weekly are critical support levels that we've held all throughout the downtrend. So if within the next 4 days and 22 hours, we lose these two support levels that we've held all throughout the correction, it is not a guarantee that we're entering an extended bear market, but the likelihood of us correcting further and for a long time really starts to increase if we get a weekly candle closing below these moving averages. So it's not all doom and gloom yet. It's not going to, no need to panic. Again, if you're going to panic, do it with our bybit link, because we make money, and everyone who shills the bybit link makes money whether or not you make winning trades. So folks, be aware when you see these big crypto YouTubers who don't know what they're talking about when it comes to trading, shill these bybit links. They will make money off you regardless of whether or not you make money. So just be very well aware. So I like to kind of shill the bybit link ironically, for those who can't tell that I'm being ironic and sarcastic. But folks, again, I just want to reiterate, it's not a guarantee that if we get a weekly candle close below these two lines that we're going to dump and crash and nothingness for years. I'm not saying that's going to happen. I'm saying that if we do get that weekly close below this, the likelihood of that happening, an extended correction consolidation phase, could be a month, it could be 3 months, could be 3 years. I'm not sure. The likelihood of that just increases. So a weekly close below these moving averages is just one thing. Another kind of factor in the bear's hands, and that's what we don't want to see when we're kind of deciding what the next 6 months of price action looks like. So I see Crypto Nate's in the chat. Welcome, man. What's up? Dang, when did you all start doing webcam? Oh, recently. Yeah, we started showing our faces pretty recently. I think a week or so ago. Yeah, so giving you guys a voice to dislike, a face to dislike, not just a voice. So Christopher saying bears winning for years in Bitcoin, unheard of. Look, folks, I mean, like, I don't want to get dragged into a side point, but I mean, let's measure how long bear markets last. So it's presumed from the top to the bottom. just about a year, 357 days, roughly a year. So hey, about a year of a bear market. Let's measure 2014 here. Roughly, just over a year of a bear market. So a year and a half of bear market. So folks, honestly, if you could hold a year and a half, it's not the craziest amount of time to hold. Year and a half, it's nothing crazy. We're already kind of 3 months into our correction. So what? Worst case scenario, maybe you have to hold another year and a half before things start to go up. Now the issue with holding is that there's an opportunity cost of not buying the bottom. So this doesn't. The fundamentals look fantastic, folks, but markets can act irrationally longer than we can stay solvent. The fundamentals could be great, but markets act irrationally, and market movers will do what they want to do regardless of fundamentals. So just understand that. I'll also just gonna wrap up here on this point here. If we do within the next 4 days and 22 hours have a weekly candle close below these two EMAs, the 50 EMA on the weekly and the 55 EMA on the weekly, I will begin to move into stable coins, because while this is not a guarantee in the end all be all that we're entering some extended bear market, it increases the possibility. So just understand, folks, that based off price action evidence, not my feelings and intuitions, I will extremely begrudgingly practice risk management and move some percentage of my portfolio in stable coins. What percentage I haven't figured out yet, but some percentage I will if we get that weekly candle closing below us, just because that's bearish confirmation and that could drive us down below 30. Although, folks, ultimately, as long as we don't make lower lows, as long as we don't get a daily candle closing below 30,000, then the bulls have a chance of winning. But if we start making lower lows now, it doesn't look good. Does not look good. Also, Bitcoin dominance is going up, suggesting weakness in the altcoins. So it's not only Bitcoin that's looking pretty bad, it's the altcoin market as well. So we'll get into that with Ethereum, but there's still plenty of Bitcoin news to discuss here. As well, the total crypto market cap is testing a critical support region that if we lose is not good. So, folks, over here, total crypto market cap was moving sideways. Bulls decided to take charge. When the bears decided to take charge, the bulls defended against the bears at this 1.3, 1.25-ish trillion region. A clear base of support that the bulls have defended. Here, kind of, we defended that region. Here as well. These wicks here on total crypto market cap proved that this range was still relevant, and so we're currently kind of dipping below it, but it is kind of a zone of support. But if we start to dip below 1.25 trillion in terms of total crypto market cap, that starts to look real bearish, folks, real bearish. So we don't want to see that. If we do bearish confirmation, it's just kind of a confirmation that the market sentiment is overall bearish, and then we could probably see further moves down. Downward. We're seeing a similar situation with the total altcoin market cap here. So we're currently testing a previous range, which was once heavy resistance. We broke above it. Now we're coming down to retest it, and guess what? Now it's heavy support. Isn't it funny? Previous strong resistance, once we break above, then turns to previous strong support. So this is kind of a zone. I have drawn this different ways because it is a zone. Ultimately, I could really widen this and make it like this, but the wider the range, the less helpful it is. I do think a wide support range like this does make sense, but I think the more specific you can be, the better. I do think this does encompass a lot of, I don't want to say a lot of candle price action, market cap action. Anyways, bottom line is here, what I'm trying to get at is that altcoins are testing support. We got to hold support. If we lose support, that's bearish confirmation. We can see more downside. So if the altcoin market starts to dip below 630 billion, if it loses 600 billion, not good. Bearish confirmation. We could see more downside. So altcoin market cap 600 billion critical level we got to maintain, and for total crypto market cap 1.25 trillion is critical. I think if we lose those regions, that will serve as kind of bearish confirmation at the very least in terms of sentiment for the market. So let's keep going here. Folks, again, in terms of price action being shit and fundamentals being fantastic, let's talk about price action. The dollar, the DXY. The DXY is pumping. This doesn't make any sense. I'm going to share with you guys some numbers that recently came out in terms of inflation. Inflation is increasing, the money supply is increasing, and the dollar is rising. Doesn't make any sense whatsoever. None. This doesn't make sense, but it's happening, and this is bearish for Bitcoin. We're seemingly testing resistance, maybe perhaps breaking out of resistance based off this peak here, this peak here to this next lower high. If we see continuation of this trend, if we continue to break above this thing, not good, folks, not good. Because if we could break above this thing, we're gonna test this high here at kind of 93.4. If we make a higher high in the DXY, that's bullish confirmation. The DXY could see is more likely to see further bullish continuation, which is bad news bears for Bitcoin. Because again, folks, Bitcoin is within this very tight range. It's getting tighter and tighter and tighter. We're in a make it or break it territory. We're trying to decide if we're going to have a giant relief rally to 50, or if we're going to see a crash to 26, 24, 20. Any one of these major macro factors could be the thing that is kind of the tipping point that tips things over one way or the other. And again, folks, I see more people trickling in. Smash that like button if you like this analysis. Smash that like button, because the more likes we get, the more views we get. It's that simple. If you like us, smash that like button. So, folks, bottom line with the dollar, we do not want to see continuation. If we see continuation to break above this white line, we could test this high. If we make a higher high, macro bearish confirmation for Bitcoin. We do not want to see the dollar continue to go up. If the dollar continues to go up, that is likely to act as a suppressant for Bitcoin. Not only that, the stock market seems kind of primed to have a little bit of a pullback. That would be no bueno. We do want to see a healthy stock market. I do think we could see the Nasdaq pull back a healthy, between 5 and 8%, kind of retest the previously established trend line. So, we are kind of a bit overextended to the upside. We did recently put in all-time highs with the stock market, with the S&P and the Nasdaq. So overall, stock market is healthy based off price action. A little bit of a retracement in the short term isn't the most crazy thing. But if we do get that retracement in the stock market and the dollar's pumping, again, not good for Bitcoin, folks. Not good. Now, price action is shit. We all realize that. But fundamentals are great. One bullish fundamental, and let's try to get a sense, and maybe perhaps after we go through kind of the price action and fundamentals, maybe get a sense of clarity within this market and kind of summarize. But to start talking about some of the fundamentals with Bitcoin, we have Bitcoin held on exchanges constantly leaving. So Bitcoin is being bought up. That's bullish. Less supply, demand is consistent or increasing at some kind of rate, then price goes up. That's bullish. We're seeing some kind of market cycle indicators that kind of show us a minor capitulation, flash buy signals, multiple of these signals. For the first time in history, we have deviated the most ever from the stock to flow model. Stock to flow is Plan B's model that kind of tracks supply and incoming supply and how that has compared with market cap, and then just extrapolates that moving forward. So let's actually show you guys, for those who don't know, the actual stock to flow model. Now there's two stock to flow models: stock to flow model, the stock to flow model, and the stock to flow model X. Stock to flow model X is the newer, more updated, more bullish price prediction model for Bitcoin. It incorporates some outside data, some gold and silver data, and extrapolates it into kind of Bitcoin's price prediction model. And so, according to stock to flow, the original model, it predicts a Bitcoin over 100,000 this cycle. So this is the most we've ever deviated from the stock to flow model. So if you believe in stock to flow, maybe a great buy the dip opportunity. Again, just another reason to kind of show that a model that isn't perfect, maybe flawed, but that has historically done some kind of good job of approximating price predictions for Bitcoin, is flashing. Could interpret to be flashing a buy signal, given that we're deviating from this model, and this model has historically pretty well tracked Bitcoin's price action. So again, fundamental reason to think Bitcoin has more room to the upside and it's undervalued. Now, point to being in the bear side, pointing to the price action being shit. Shorts are rising. We showed you guys how in a couple other live streams, whenever we see this spikes in shorts, we've typically seen a downtrend within the market. I'm not going to line these up perfectly right now, but just understand that we've done this. And again, whenever we see this sudden spike in shorts, typically market goes down unless we have a short squeeze and there's a bunch of buy volume out of nowhere, but we haven't really seen that. Now, folks, I do want to bring up a giant news story that we need to discuss in terms of inflation and some money supply numbers. Before we do, smash that like button, because this is massive news. We recently had, this is pretty massive, but let me show you guys some some numbers here. I thought I had. It'd be funny if I don't have this chart. Okay, here I do. I have this chart right here. So some recent numbers came out. So in June, inflation hit 5.4% year over year, its highest level since 1991. Let me say that again. The dollar's inflation has never been higher since 1991, and we're seeing the dollar pump. So this is the least valuable the dollar has been since 1991 in terms of purchasing power, but for some reason the DXY is pumping. Again, folks, doesn't make sense. Does not make sense. But we're seeing it. So again, kind of bearish. Actually, this is super bullish in terms of Bitcoin because this perfectly kind of helps out Bitcoin's use case, which is hard money, which is digital gold. So when the global reserve currency is constantly losing its own value, then a digital asset that's very liquid, very hard, has a finite supply, it's kind of deflationary, starts to look very bullish when the global reserve currency is constantly losing its own value. So folks, inflation is clearly going in one direction. Americans have been printing trillions and trillions of dollars, and they're likely to continue printing trillions and trillions of dollars. Well, folks, I just saw myself on the other screen here. I got a nice double chin, I got to work on that, folks. I got to get out some more, maybe ride a bike or something. But folks, look, these numbers are long-term bullish for Bitcoin. Inflation increasing over the long term is bullish for Bitcoin, but really bullish for Ethereum because come next month, Ethereum will introduce EIP 1559, and it will become harder money than Bitcoin because Ethereum will actually become deflationary. And again, I don't want to go on some ETH rant. I'm very bullish on ETH. For those who watch the channel, you know that. But just understand that this is a bullish fundamental for Bitcoin over long term because the world is going to need a hedge against inflation eventually because the Americans have been printing trillions of dollars, and they're likely to continue printing trillions and trillions of dollars. So I don't see anyone posting here in the chat. I just want to make sure, can you guys still hear me? Because sometimes we have some connection issues on my end here. So if we can get a little bit of bullish confirmation that you guys can hear me, that would be great here on my end. But in the meanwhile, allow me to continue. So I did find this news story kind of talking about this very bullish chart for Bitcoin. So again, this goes to a point of the fundamentals for Bitcoin are absolutely fantastic. So what are we looking at here? This is the this white line here is the total supply of dollars held by banks. We can see that's constantly going up, and Bitcoin has had its parabolic run-ups when there has been a lot more dollars printed coming into the market. So as we can see here, as soon as the dollars start to increase, that's when Bitcoin has historically had kind of these run-ups, and we've seen a massive spike in dollars being printed as of recently. So this is pretty interesting to see here. So we see, one commenter here saying, "Log, if I'm interpreting this right, Bitcoin always overshoots the G4 total balance sheet. If this repeats, we will easily cross to 1 million Bitcoin." So folks, I don't think we're going to go to 1 million Bitcoin anytime soon. But this is a pretty bullish chart nonetheless here. So if we can go back to this chart here, we can see that this pink line is the Bitcoin supply annual change. So we can see how Bitcoin supply is consistently going down. The money supply is consistently going up. So what happens when the dollar supply is consistently increasing and lowering the value of each dollar? And then you also have a widely globally popular, highly liquid store of value that's highly finite and highly in demand, Bitcoin. We can see how whenever there's been these large spikes, we saw an increase in the dollar value of Bitcoin. So folks, look, I'm very bullish on the space long term. The fundamentals have never been better. The price action is shit. So one thing we can do to arm ourselves against the uncertainty of us not knowing if 3 months from now we're going to be at 80,000 or 20,000. One of the things we can do is have a long-term outlook when it comes to investing in this market. Because, folks, we are in the most highly volatile asset class in the world. We don't have a clear sense of direction. Markets can act irrationally for a long time. The fundamentals are very bullish, but the technicals and the price action is extremely bearish. The short term is extremely bearish. So one of the things we can do to mitigate the risk of the unknown and mitigate the risk of the short-term bearish price action is have a long-term price rising. Because yes, markets can act irrationally for a long time, but eventually, the longer you wait, the more likely it is that fundamentals will eventually catch back up. And so if you're willing to hold for years, if you're holding quality, things like Bitcoin, things like Ethereum, things that have long-term staying power, well, in my opinion, based off the fundamentals, I do believe that it is just a matter of time before we end up being right, before we end up being profitable. Because, folks, I say this a lot, I'm going to repeat it because it's true. We're on the right side of history. We're in the right trade. The time frame is unknown. We don't know if we need 3 months or 3 years to be right. So the longer you're willing to hold, the greater your risk is mitigated. The greatest risk when it comes to crypto is the volatility. The way you mitigate that is your time horizon. So, folks, have a long-term time horizon when it comes to crypto, making lower lows, getting a daily close below 30,000, getting a weekly close below these moving averages. I do think make it more likely that the bears could win and that we could see further downside. So, that is what I'm using to kind of practice some risk management and move into stable coins. With that being said, again, folks, I do think it's just a matter of time before things start to look pretty bullish here. So, folks, that's what's going on with Bitcoin. Let's talk about Ethereum, because Ethereum is looking pretty bearish as well. Ethereum has lost $2,000, and if we have lost the 618 Fibonacci retracement based off our short-term impulse, actually, you know what? Yeah, whatever way you draw this. Yeah, so if you draw a Fibonacci retracement in the short term here from kind of this low to this high here, we have lost the 618 Fibonacci retracement, typically where things like to retrace to. We have lost the 200 daily EMA and the 200 daily SMA and the 21 EMA on the 6 hour, all super bearish. So we have extremely price reactive moving averages, super critical for calling long-term price action and short-term price action for ETH. Both above us, both likely to act as resistance moving forward. 618 critical Fibonacci level lost, likely to act as resistance. We have sideways moving price action in the short term that's been established as relevant. Above us, likely to act as price action. Likely to act as resistance. So there's a lot of reasons to be bearish, folks. And the longer ETH stays below 2,000, the more ETH is bearish. So we have got to get back above $2,000 soon. Sooner rather than later, because the longer we stay below this, the more the bears are in charge. And if we lose 1,700, if we lose the 618 Fibonacci retracement from the macro bottom, cycle bottom to the all-time high, and volume here at 1,700, then, folks, we could see a lot more downside, but not just downside as a percentage, but downside as in time. The extent to which we will correct and consolidate could be months, could be years, not a guarantee, but the likelihood vastly increases the longer we stay below 2,000. And if we lose 1,700, then I will heavily move into stable coins. If we put in a lower low, macro lower low, we'll move in. I'll move into stable coins. And also, this is reflecting on the Ethereum Bitcoin pairing. The Ethereum Bitcoin pairing is relevant because Ethereum is a temperature check of the altcoin market, and so a healthy ETH is good for the altcoins. ETH has been losing a support level that's been established as price reactive, so that's not good to see. Ultimately, I think kind of the last stand is this low on the ETH BTC pair. If the ETH BTC pair loses this base of support, you're kind of the 0.055 region. Basically, if we make a lower low, we don't have to know the exact decimal to the number of the decimal, but if we make a lower low, bearish confirmation, ETH is unlikely to see upside if we make a lower low, at least in the short term. And if that does happen, alts are likely to suffer. So, folks, this level right here is critical. We got to maintain this. If we don't, that is no bueno for the altcoins. Not good. So, folks, the bad news bears are in town, but there's no need to panic, because what we need to wait out for is confirmation. Confirmation. There's no need to panic or make decisions based off emotions. Price action will tell you what's more and less likely. I see techno guys saying, Brandon, drink some water, bro. I think you're right. I think I do need to drink some water. And so I will definitely drink some water. Is my voice, am I just ranting too much? So, give me a second. Mm. By the way, I'm so glad you brought this up. So unfortunately, Messin could not make it on the live stream, but I was able to talk to him earlier and share with him a poll we recently put out, which he very much enjoyed. Folks, so look, there's been this friendly competition with me and Messin in regards to who is more hydrated and who can drink more water. And folks, the people have voted. This is the biggest news of the day right here. Look at this, folks. Look at this. I put out a poll the other day saying, who is more hydrated, Brandon or Messin? Simple. Staking to the facts, having the people voice and speak their will. And the people have voted an absolutely fantastic number. The only number I would have been more happy to have gotten is 100%, but I'm very happy with this number. 69% of the audience has voted and spoken their truth, saying I'm more hydrated than Messin. So folks, Messin may try and lodge some allegations against me that are totally speculative and have no base in reality. Here on this side, we stick to the facts, okay? And the facts are, every live stream I drink water. Have we ever seen Messin actually drink water on a live stream? He claims to be more hydrated than I am, but where's the evidence? And it's not just me. The people see it too, folks. The people have voted. Most of you guys, based off kind of, reality, see that I'm just more hydrated. So I can't tell you how much fun I had showing this to Messin. Messin really appreciated this as well. So he's planning a couple things. He told me he was going to go buy some jugs of water. I hope he does. That guy's severely dehydrated. I honestly hope that he takes this and starts drinking some water, because folks, this has been again, for the people who maybe don't know us, this has been an ongoing issue for quite a long time. And again, there's lots of important price action, all bull market or bear market to discuss, but this is important stuff right here, folks. There has been tons of allegations lobbed against me that I am not more hydrated than Messin, and I've tried to defend myself. I've tried to stick to the facts. I've tried to, I've stated how we've never seen Messin drink water on a live stream. I bring a jug of water. This is at least 17 gallon. I drink 5 of those a day. All right, folks? And we have never seen Messin drink water on a live stream. So I think it's pretty clear. The people see it too. I'm vastly more hydrated than Messin. So we'll see, folks. Hopefully this puts the issue to bed. We'll see if Messin comes back and tries to, spread some fake news. Just be aware that, Messin might try to cast some doubt in your mind as to who's more hydrated. But at the end of the day, folks, we all know. We all know who's more hydrated. So that's that news. Thank you for that one person for derailing me. I highly appreciate that, because that was some fun here. But if we can get back to some serious news here. So in the short term, it is not all completely doom and gloom. Again, the fundamentals are fantastic, and we do have some price action. Ideally, I like that transition to think that there is kind of some last stand of support here. So we do have kind of a previous peak here, a kind of 1900. That should act as support. We do have the 786 Fibonacci retracement from this from the bottom of this impulse up to the top of this impulse. That should act as support. And again, fundamentals are fantastic. We have Ethereum dramatically leaving exchanges, which is extremely bullish. So again, folks, fundamentals are crazy bullish. We have EIP 1559 coming next month. We have the number of active addresses on Ethereum spiking and surpassing Bitcoin for the first time. We have London hard fork August 4th. We have banks offering staking services and custody services, and we have Goldman Sachs now suggesting that Ethereum could one day surpass Bitcoin in terms of market cap. I'm glad Goldman Sachs is catching up to what I've been saying now for months. So folks, just to kind of summarize here, fundamentals fantastic, price action garbage. It's shit. It's very bearish. It's bad. We're losing critical support, folks. ETH has got to get back above the 200 daily SMA and EMA. If we don't, the longer we stay below this, the more bearish we are, and the more bearish continuation we could see, and the more downtrending we could see. The longer we stay below this, then we could probably test this low. And if we test that low, there's a possibility that we make a lower low. If we make a lower low, that's bearish confirmation, and we could see far more downside potential. So, folks, see someone over here saying, Christopher is saying, that you should tell you that price action is manipulated? Yes, price action is 100% being manipulated. The issue with these pullbacks, folks, is that if we start to lose certain levels, it's bearish confirmation. And each layer of bearish confirmation makes it more likely. Again, none of this is a guarantee. It could be complete manipulation, and we can go right back up, next week. And I'm hoping we do. I think we will. I'm betting that we will. I'm putting my money where my mouth is, buying into this market. But we could end up being wrong. And losing these critical levels, I'm trying to describe, makes it more likely that we will continue to lose more critical levels. We're getting bearish confirmation. We are in a bear trend. We're putting in lower lows, lower highs, and breaking support. The more we do that, the more likely it is that we will continue to do that. And the only way we'll break that bearish price structure is by doing three things. Folks, if we want to be back in a bull market, we need to do three things, not based off feelings and intuitions, but based off price action and evidence. We need to make a higher high, we need to make a higher low, and we need to flip major resistance into support. We have not done any of that with Bitcoin. We recently did it with Ethereum, flipping critical resistance into support, the 200 daily EMA and SMA. But now we're back below it, so this is bad. This is not good, folks. This is not good. Bad news, bears. Let's look at our indicators briefly here. Yeah, bearish crossover in the daily MACD, not good. Although I was seeing some signs of hope on the 4-hour. So looking at the 4-hour chart, which is kind of a nice medium time frame, I think that is good for kind of trying to figure out what's in carryover to the higher time frame. So weighted MACD is moving up. Volume is decreasing. Yeah, 2 hours seems ready to maybe go up. Again, we're a bit overextended at the downside. 1 hour is looking bullish, so we'll see if that translates over to the higher time frames. So again, 1 hour extended at the downside, bullish divergence. So hopefully this 1 hour bullishness translates into the 4 hour. If the 4 hour starts to look more bullish, then we could retest that 200 daily SMA and EMA. Hopefully we get back above that. If we do, that's a good sign. Longer we stay below that, the more bearish Bitcoin looks. Let's take a look at Bitcoin. Bitcoin 4 hour is actually looking bullish here. So we're currently testing this low and holding our support for the moment. MACD ticking up, with MACD bullish crossover, RSI. Yeah, RSI is not doing anything particularly interesting. Stochastic RSI is oversold on a bullish crossover. So the 4 hour, I'm optimistic on the 4 hour. I do think some kind of short-term relief rally is possible. Again, the issue is that there's just so many endless layers of resistance above us. Given that the macro trend and micro trend is bearish, I'm highly dubious of any kind of relief rally we have. Also, not to mention, we have, what is this? Do I have this pulled up here? We have the GBTC unlock happening the 18th. So in a couple days, we have a bunch of Bitcoin being unlocked. So that will be potential selling pressure. But so folks, this unlock is happening right around, not exactly the weekly close. So if the weekly can get back above those moving averages and we don't have some sell pressure with this unlock, that's very, very bullish. So we'll see if that happens, folks. I'm giving the market a week. I want to see that weekly close, but before I make any major decisions. Christopher is also saying, how do you personally set your stop loss limits while maintaining your positions? So Christopher, I divide my approach in this market in a few different ways. I divide my long-term portfolio, and then I have a trading portfolio. And the two things are completely different. So with my long-term portfolio, I don't have any stop losses or limit orders because I don't hold my long-term portfolio on exchanges. You probably shouldn't hold your crypto long-term portfolio on exchanges because it could be hacked. A country could just decide to stop supporting it, and the exchange could just all of a sudden shut it down. And hey, all of a sudden, we can't give you your crypto back. And if you have a significant amount of money there, all of a sudden, it's lost forever and you can't do shit. So first off, I don't set stop losses or limit orders on my long-term portfolio because I don't hold it on exchanges. Now, when it comes to trading, how do you set stop losses? It really, really varies. It completely varies on the kind of trading I'm doing. With swing trading, I'll just set a stop loss below a critical support level. It's very hard to give you a general answer because I can't, because it's tailored to the kind of trading I'm doing, whether it's high time frame or low time frame, the kind of volatility within the asset I'm trading. Unfortunately, I don't think I can give you the answer you want because when it comes to trading, it's completely specific on the kind of trading I'm doing at the moment, whether it's scalp, long time frame, short time frame, the kind of volatility within the asset, what I'm trading, what kind of major support / resistance there is, a bunch of stuff. So, but I think you might be talking about long term, since you said while still maintaining your positions. Yeah, when it comes to long term, folks, look, if we lose like the weekly, like let's say we get a weekly candle closing below 32,000. If we get a weekly candle closing below 32,000, I'll probably just look at my portfolio, see what I'm in profit on, and sell the profit, move that in stable coins. I'll probably USDC or DAI. So that's what I would do. Hopefully that answers your question. GoldenEye saying sheesh. So I don't know if that was a good answer or a bad answer. I think maybe it's a good answer. I don't know. Hope you enjoyed that. So hope that answered your question. And so, folks, look, we could go through a bunch of altcoins, but bottom line is, if ETH's bad, then altcoins are bad. Right now, me and Messin are choosing to place a heavy focus on specifically Bitcoin and Ethereum right now, and not looking at a lot of altcoins as a choice, because Bitcoin and Ethereum are fully driving the market. If Bitcoin does well and ETH does well, altcoins will do well. Bitcoin and ETH does bad, altcoins will do bad. So looking at Bitcoin and Ethereum is basically like looking at the altcoins. Again, we can look at altcoins to understand kind of like the specific relevant level specifically to the altcoin. Like for Aave, for example, right now we're losing the 618. We're losing a previously established base of support at kind of 280, 290. So again, bearishness all around. Market is bearish. For the market to stop being bearish, for alts to stop leading, Bitcoin and Ethereum need to get their shit together. The longer we stay below these levels, less we're going to get our shit together. So, I think I had some more news stories here that I want to mention. Again, bullish fundamentals, folks. Bullish fundamentals. Bitcoin has been leaving exchanges dramatically, such as Ethereum. As we can see with this here, when we experience Bitcoin leaving exchanges, that was basically the majority. It was all of this cycle's bull run. See, folks, look how perfectly it's tracked. Excuse me, let me drink some water. As we can see here, as soon as Bitcoin leaves exchanges, bull run continues. Bitcoin enters exchanges, massive sell-off. So what are we seeing now? We're seeing Bitcoin leave exchanges, but the price is going down, which is arguably bullish divergence. Again, another fundamental reason to be bullish. So if you're a pure fundamental analyst, like many people are, you would be extremely bullish. The issue with only focusing on one kind of analysis is that markets are irrational. And if you're only following a fundamental analyst, or if you only considered fundamentals, then you would call the market incorrectly a lot of the time, because markets act irrationally. So that's why you also have to follow price action, technical analysis, and fundamental analysis. So folks, like these people in these channels that are just 100% bullish, I think are doing people a disservice. Because yes, I agree, fundamentals are crazy bullish, and eventually price action will catch up to the fundamentals. But markets can act irrationally for a long time, a long time, for months, for years. And yes, eventually, you will be right. The fundamentals will catch up, but that eventually could be months, it could be years. So that's why it's important to like and subscribe and follow technical analysis. That's why it's important to consider all factors that can move a market and not just be dogmatically married to fundamental analysis or technical analysis. One should be open to whatever just so happens to move a market, whether it happens to be on a chart, on TradingView, or off TradingView. So I just, I don't want to go too much of a rant here, but again, folks, like and subscribe, because we bring you hopefully a better and hopefully improving over time sense and analysis of both the technicals and the fundamentals, because they're both important to consider. They're mutually beneficial. They're not mutually exclusive. And a lot of people seem to think that, or want to think that they're mutually exclusive. Also, folks, come on, folks, what a perfect number. So let's see if I had any more news here. That's pretty much all the major news. I say Teabag saying exactly, you have to consider both fundamental and TA as opposed to being hardcore fundamental or TA only. Yeah, and again, guys, I bring this up because I see people who are only fundamental and who are prickly to TA and it doesn't make any sense. I see people who are only TA and prickly to fundamental analysis, and it doesn't make any sense. It's dogmatic. It's like it's tribal. It's religious. There's no need to pick a camp and stick to it. No, you just follow whatever evidence, whatever information, whatever data anywhere happens to affect the market. And so that's what hopefully we're gonna bring you guys, and also focus on moving forward. The off-chart stuff, the on-chart stuff, whatever moves this market is what we will pay attention to. So there's lots of option stuff, and it's stuff we're trying to get more involved with behind the scenes, different indicators. But folks, yeah, another thing too, you don't have to buy indicators, folks. You really don't. You can get really far with the basic stuff. But look, everyone's doing different stuff. Everyone has their own approach. This is just mine. So folks, look, unless there's any other kind of raging questions here, I'll start to wrap it up here. Just to kind of summarize, price action is shit. Fundamentals are fantastic. Markets can act irrationally for a long time. This boring price action that we're experiencing now will likely decide what the next 6 months of price action looks like. So do not turn off, folks. Do not pay attention. When everyone's not paying attention, that's when you should pay the most attention. Like and subscribe and hit that bell icon, because if anything dramatic happens, we will be letting you guys know. Folks, I'm looking at some critical levels that do not guarantee that we're entering some kind of extended bear market if we fall below, but increases the likelihood that we could. So I'm using the 50-week EMA, 55-week EMA as kind of an area to practice risk management extremely begrudgingly, that if we get a weekly candle close below these levels, that's bearish confirmation. So folks, we have 4 days and 22 hours left to see if the bulls or bears take charge. We'll see. In the short term, we do not want to lose this previous low. If we do, we could see more downside. Yeah, that's pretty much it. I can go on to summarize further, but I'm pretty sure I've said everything that's on my mind. Folks, like and subscribe. Become a Patreon member. Link for that is down in the description below. And hopefully, me and Messin will be getting on a live stream tomorrow. It's going to be very interesting to see what he has to say about some of the stuff we've been discussing. Give our Twitter a follow. Give our Discord a follow. Tons of interesting stuff there. And here's why you want to give our Discord a follow. One of our great members, shout out to It's the King, brought us Audius back when it was under $1, right before it ran up to like $4. So, folks, our members are fantastic. Lots of great people doing great TA in there. A couple people on my mind. I don't want to single anyone out. Also, I don't remember the names off by heart. But look, there's a lot of people doing great TA in our Discord group. So make sure you catch that. I see Golden here right before I wrap up, saying, do you think if we didn't have stimulus pump this super high and super fast, would the major EMAs still be under us and more level? That's an interesting argument. So basically, if whatever factor drove us to go up quickly hadn't happened, and if we instead grew more steadily, then yeah, we could have maintained critical levels. And guys, the reason why these moving averages are relevant is because, number one, they're price reactive. So I try and identify and bring you guys price reactive moving averages, because you can look at dozens of moving averages all through different times, but how do you know what's important? I try and find what's price reactive, because what's price reactive is likely to be relevant moving forward, and what's price reactive and likely to be relevant moving forward, traders will use to make decisions. So these are inflection points that do affect liquidity, sentiment, and how traders behave. So these are relevant. So let's say we did move up more slowly and more gradually, then yes, we could have maintained these moving averages and thus probably seen more continuation over the long term, because the issue with moving fast is that every reaction is an overreaction. Whenever we move up very quickly, we usually eventually move back down very quickly. That's a parabola. That's a market cycle. We go up quickly, eventually we go back down very quickly. A lot of people argue that the parabola is not done and that we're going to have a second run up of the parabola later this year. Hopefully we'll see that. I don't know. But yeah, folks, the harder we go up, the harder we crash. So if we would have just gone up more steadily, then we wouldn't have been as overextended. Then a correction wouldn't have had so much weight and wouldn't affect liquidity and sentiment so much. And so, yeah, maybe, yeah, I think there is something to be said of a steady market having more long term, or being able to see more continuation easier. Yeah, so folks, okay, that's enough for me. It's getting late on my end. I gotta go to sleep. I gotta start waking up early. Messin wakes up in the middle of the night, and so I'm trying to get more on that kind of schedule. That way, we can be up early for you guys. We can be up and early for the stock market open. Because unfortunately, I have to try and be a stock analyst, even though I don't want to, because stocks do affect crypto. So we will be analyzing that moving forward. So folks, stay tuned, like and subscribe, hit that bell icon, and wait for the morning, because me and Messin are going to have a lot to say. I'm looking forward to it. I hope you guys are looking forward to it. And take care. FOMO buy with our buy.